In this episode, we're talking about FANG stocks. All right, welcome. Thanks so much for joining us. This is episode 11 of Access Granted, and today, as I said, we're talking about FANG stocks. So this has been a topic that's come up with a number of clients. It's been in the media over the last about the last year, I'd say. Brought Craig in here today to talk about exactly what are the FANG stocks.
Sure. So the FANG stocks is just an acronym that was created by business networks to sort of group together some of the high growth tech companies. So the acronym FANG actually represents Facebook, Amazon, Netflix, and Google, and sometimes people throw in an extra A, and that would be Apple. And actually, I've also seen FANG spelled with an M, which is sometimes used to represent Microsoft, but it's basically just a grouping of those high-tech companies.
Right. So why then is this such a story all of a sudden, or why has this been a story over the last year? Why is the media grabbing hold of this thing?
Yeah, I think there's a couple reasons. I think people tend to like stories with companies with a lot of growth. So anytime you see a company with a lot of growth, it's exciting. So people are drawn to that. I also think the technology aspect to it makes it kind of more interesting. And the third thing is just their stock performance has been fantastic. So, if you combine those three things, I think that's why there's a lot of people talking about them.
Right. Now, one of the things that we've been seeing a lot more of recently is especially when relating to the overall indices and how these individual companies or this small group of companies is affecting the overall index and performance from the index in terms of points and growth. So maybe make a comment around that, just like how these individual FANG stocks are impacting the S&P 500 and the other American markets in particular.
Yeah, well, it's been a huge impact this year, and if we looked to the numbers to the end of June, the S&P 500 was up about 8.5%. The FANG stocks as a group averaged at about 30% stock market appreciation during that time. So if you actually took out, and a lot of them are really quite large companies now, their market caps are big, so they're representing about 10 to 11% of the overall index. And so if you just pulled out their returns, the S&P 500, or basically the rest of the U.S. stock market, was only up about 1.4%. So, they obviously have had a dramatic effect on the returns this year. And you got to be mindful of that as an investor, because if you were to just buy an S&P 500 ETF and think, oh, this has done really well for me, well, realistically, it's been 5 to 10 companies that have done really well for you, and the rest of them have kind of lagged. So it's just something to be very careful about.
Yeah, the one thing I'd add on to that is I know that a lot of people like to benchmark against the indices, and maybe that's not necessarily a fair comparison to a lot of different portfolios because of such things like this with market cap weighted indices. As companies grow, like the FANG stocks have, it can essentially skew the index and make it an unfair comparison basically for markets.
Yeah, and I think, for value investors who are looking to get a good price on the companies that they're buying, it is challenging because, when so few companies are driving the returns of the index, you either own those companies or you underperform. And, a lot of the times the value people can't buy the highest flying stocks because they're typically growth-oriented companies, and they're typically more expensive.
Right. So speaking to that, then, are there any of these companies, any of these FANG companies that you like right now? Or are there any of the companies that we're looking at for our portfolios, or what are you thinking about them?
Yeah, we're always looking at them. It's kind of an interesting grouping because they're not, in some ways the FANG stocks directly compete with each other, but for a lot of it, they're actually doing very different things. So, I would say Google and Facebook are similar in that they're driving most of their revenues from advertising dollars. Apple sells iPhones and tablets. That's where they generate most of their profits. Google also has a phone software, but most of the revenues still come from advertising. Amazon is a totally different animal. It's a retailer. It's an online retailer, but it sells pretty much anything. And then Netflix is a subscription video service, so they're more like a cable network. So they're doing very different things. I would say that all of them are quite expensive to varying degrees. Apple is, expensive, but not crazily so. Amazon is probably quite expensive, and then Netflix would be just way too expensive. We wouldn't really be interested in it where it's currently priced, just because they have to grow so much to justify the price that it's trading at. But we're always looking at them. Like Amazon, I think, is just a tremendous business, and it also has a long runway for growth. So that's one of the things that I like to look for is, comparing. A good comparison is Amazon and Facebook, because Facebook has had tremendous growth. They've grown at about 55% a year over the last 6-7 years. So if they could maintain that growth, obviously you're going to make a lot of money on the stock. But the problem with it is they probably can't maintain that growth. Their revenues right now are $27 billion. So if they were going to continue to grow at the rate they are growing at, that means their revenues in 10 years would be $2 trillion, which is just not very likely that they're going to be able to grow to that size. But Amazon, on the other hand, I think has a lot more runway, because the number of businesses that they're invested in are just much more diverse. So they have a lot more market share that they can grab at, and for that reason, Amazon's definitely one I'm watching to see if there's a pullback ever. And Google, we've owned in the past. I still like Google as a business, but it's starting to get pricey too.
So safe to say some of them are good companies, but they're a little bit pricey right now.
Yeah, like for the most part, I would say they're all fantastic businesses, but you don't want to overpay for those businesses.
Right, fair enough. All right, well, there you have it. That's basically the nuts and bolts on FANG stocks. So keep your questions coming, though. We're really enjoying doing these, and this is the questions that we faced a lot with our clients. So keep those questions coming. Send them to cgwfamilywealth@nbc.ca. Send us an email. Be sure to visit our site, cgwfamilywealth.com, and stay tuned for the next episode. Ready, aim, fire.